Today, we're breaking down 13 must-know stock trades before the market opens tomorrow, Monday, the 18th. And we're talking about AFRM, AMD, AVGO, DELL, Google, Eli Lilly, MRVL, MicroStrategy. I guess they call themselves Strategy now. NVDA, PayPal, SOFI, and the Trade Desk. Today, we will discuss where we are in the S&P 500, interest rates, as well as the economic news for the week, tariffs, and I guess there was a credit downgrade for the U.S. And to me, I mean, is that a buying opportunity or something to be concerned about? I think the former. And then we will jump on the option trading platform and I'll show you live what I've got on in those 13 trades and exactly what I'm doing next week. Before we get started, be sure and hit like and subscribe down below. Download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're new or learning, start small. The S&P 500 closed out its fifth straight week of winning sessions, and as you can see here, there's a 5.3% uptick over the last week in the S&P 500, and in technology we were up almost 8% as well. So all the sectors did very well, and NVIDIA even soared like 16% last week. And this is with the optimism around the easing of the U.S.-China trade tensions, and the Dow is even up now in positive territory. So despite the rally, inflation expectations have also, I guess, ticked up. Although I thought they were calmed a little bit last week, but consumers are now predicting prices to rise 7% next year, and consumer sentiment remains low. If we look, although at the fear and greed index, I think the market is getting a little greedy right now. So we're up in most of these stocks at the top end of the RSI or the Bollinger Bands. As far as the economic reports that we've got coming out this week, we don't have too big a week. Thursday, we've got jobs coming out and PMI and existing home sales, new home sales on Friday. So not too much on the calendar. And then here's the interest rates that I was talking about. We're at 4.25 to 4.5 right now. And we've now got two price cuts. We expect for September, looks like one in September. So, we got July first. So July, they're expecting no cut. So Fed, this is the CME Fed rate tool, and it's still expected with the concerns about inflation to stay steady at 4.25 to 4.5. So no cut is priced in for July. For September, there's a cut, 0.25%. October, no cut. And then December, one more cut to 3.25 to 4. So two cuts priced in through the year. And if you can see here on the FactSet Earnings Insight, this has got some interesting information. But 12-month PE ratio for the S&P is 21.4, above the 5-year average of 19.9 and 10-year average of 18.3. So even though we are expecting an uptick in some of these tech stocks still throughout the year, we're still at pretty high valuations. So you may think of that as being somewhat neutral. All right, guys, let's jump into the trades on the option trading platform. This is the Tasty Trade brokerage and option trading platform. This is the downloadable version. They also have a mobile version, but Tasty Trade, there's a link down below. It's my favorite option trading platform. There's benefits if you go through my link, so check it out. The first, actually, this is, I think there's 26 stocks here that I've got on right now, but I'm not going to cover them all. I'm going to focus on the top 13 trades that I see for next week that are kind of no-brainers. But if you have any questions on any of the 13 or any of these 26, leave a comment down below. Any comments, let me know what you're trading. I need comments, guys. We've got to get this video out to as many people as possible. So I really appreciate it, and I answer everyone. AFRM is the first one, and AFRM is trading at 52. Let's look at the chart. Now, what I do on the chart, I always look at the 1 year. Sometimes I'll look further out, but I like the 1 year. And I've got the Bollinger Bands set up. Those are in the white. And then I've got the 200-day moving average in the red. And then the green is the 50-day moving average. So when that 50-day crosses the 200-day, that's a real bullish sign. And you can see right here for a firm, we're right at the point where it's going to cross. And it's actually moved, the price has moved up above the 200-day. So very bullish. And we also have a flag pattern here, which is bullish as well. Let's go. I use Yahoo Finance to just kind of get a quick overview of all these stocks. And if we look at a firm, the 12-month, the 52-week range is 22 to 82. We're at 52 right now. So I like that there's 30 points of headroom there. And you can see it was only back in February that we were there. So as these tariffs get, the deals get ironed out, I think it's going to be right up there again and then probably beyond that. Yahoo's got, and the analysts that are analyzing this have a 67 target. We're at 52 right now. So to me, that's pretty nice, safe investment. If we look at the analysis tab, we had 2 beats and a miss over the last 3 quarters. Actually, I don't understand the miss. I thought they beat. Let me look here. But AFRM, if you don't know, they're a fintech. They operate a payment network that is targeted at consumers and merchants. They've got 3 core elements: the point of sale for consumers, merchant commerce solutions, a consumer-focused app. They have no fees for shoppers, and the vendors pay. And Amazon, Walmart, Shopify, and Apple all use AFRM, so they've got huge customers. Buy now, pay later is growing, and especially with the younger crowd. And this stock will continue to do well as these rate cuts come. And super strong fundamentals. On Q1, it was released on the 8th, so a little over a week ago, and they beat on the top and bottom. So yeah, I disagree with this miss. This is incorrect. But they beat on the top and bottom, but they did guide lower, which is great. I mean, any smart CEO is probably going to do that sometimes to make it easier to beat next time. But it's a buying opportunity for me. So let's see what I've got on right here in SOFI. Or AFRM, what I'm talking about. It's very similar to SOFI. I've got a poor man's covered call. So I've got the 50 call and the 60 against it. And I'm not going to go through how to do these, but just so you know, my big strategy right now with the market down and poised to go higher is leaps options. So if I was going to put a new trade on in AFRM, we go to the trade page, I would go out about 300 days. You can go out a year, but this... you've got to go out more than a year. So this is the option chain that I like, the March 2026. You open that up, the 50, I would still buy that today. $15, one contract controls 100 shares of stock. So we click on that, and the medium price is $14.90. And this is what I like about Tasty Trade as well. You can go right to that mid price, and it's fairly liquid. Market's not even open, and 10-cent wide bid-ask spreads, or 20-cent wide right here. But now the benefit with options, and here's another point I like about this. You can go to curve mode and then analysis, and then you can see as the stock price increases, we make money just like owning the stock outright. However, we're paying $14.90, so 100 shares is $1,490 versus if we bought 100 shares of AFRM, it would be $52.57 times 100, so it would be $5,257. So it's like it's like a fourth of the price to control the same amount of shares. Why pay 4 times more? It's like it's on sale. Now we can go to the table mode, and then we can sell the short-term call against it. So I would sell the June, and this is exactly what I've got on right now. And then I would go out to probably the 30 delta. You can go right here to the 57.5. I've got on the 60 right now. It was higher, but it is $2, and I'll delete that. But you see the price, 14.90. Now, if we sell the 57.5 against it, this is $2 that we're going to collect right when we hit review and send and place this trade. We click on that and you'll see this come down by $2. There you go, $12.83. Now, if we collect $200, sometimes we can collect $300, $200 every month. This is paid off in 5 months, and we own the control of 100 shares of stock for free. So that's kind of the strategy with the poor man's covered call. Any questions, let me know down below. And let me know if you're using that strategy. So that's AFRM. Next one, we've got AMD. I've got 3. This is a screaming buy for me right now. These guys are killing it. 3 poor man's covered calls. So I've got the deep in the money leaps. I've got the 95 and the 110. I'm in that March expiration as well. That's what I'm in for most of these poor man's covered calls right now. But AMD, if you look at the chart, they've been down, but now they're trending up. They're about to cross the 200-day moving average, which is huge. If we look at over the last year, the 52-week range is up to 187. We're at 117 right now. Yahoo's got a target of 127. For me, it's much higher. My target for AMD's it's $200. Let me see what I've got. 200. They've got super strong fundamentals. They've had, let's look at the last 3 quarters. I think they've been crushing it. Go to the analysis tab. You can see 3 beats the last 3 quarters. Strong buys and buys. They're increasing earnings year over year, quarter over quarter. Growth estimates 41% for AMD next year. That's huge. And guys, the reason for that is they've got new products coming out soon. They've got the MI350 to ramp in summer, and then the MI400 next year. So it's going to continue to go up. 57% year-over-year growth in the data center segment. They're killing it. They had a Q1 36% year-over-year revenue growth, and they've just done 36% and 41% expected for next year. So screaming buy. That's why I've got my max right now in my trading account is 3 tranches. I've got all 3 on in AMD. So strong buy. AVGO's the next one. This is the only one that I'm not doing a poor man's cover call in. It's I love the stock, but it's already moved up quite a bit. So I've got a iron condor, $10 wide iron condor. I made videos on that if you're interested in iron condors. But eventually all these stocks will be up in that upper range, and then what are we going to do? We're not going to sell poor man's covered calls because it's already near our target. But you can see we're at the top end of the Bollinger Band, flag pattern trending up. Love that. We can go to the Yahoo Finance, 52-week range, 128 to 250 and a 240 target. That's only $10 above where it is right now in AVGO. So that's why I've got the iron condor on, but super strong fundamentals. If we look at the PE, forward PE, we go to the stats. Forward PE is 34, a little bit high, and PEG is 0.6. So that's still great. Price to earnings to growth rate. And super strong. And then if we let me take a look at some of my notes. So they've got a vast array of semiconductors for the AI, and their traffic. What Broadcom said on their conference call is they estimate that 99% of all internet traffic crosses through some type of Broadcom technology. That tells you how big they are. Many people think that Broadcom is the best AI semi stock out there, and their revenue jumped 25% to $15 billion, and earnings per share 160. So I like Broadcom. All right, let's move on. What is the next of the 13? I think it's DELL. All right, let's look at the chart for DELL. just broke the 200. You can see that common pattern with many of these tech stocks. So DELL, it's trading at 114 right now. And if we look, 52-week range is up to 180. So a lot of headroom as well. PE 17, and they've got a target of 130. I think it's much better than that. And you know what I also noticed is it's kind of a double bottom here. If we look at the chart, so that's a huge bullish sign as well. So the chart and the fundamentals super strong. If we look at earnings, 3-quarter beats, strong, super strong buys. These guys already, I think with Elon and Tesla, I think there's a possible server deal in the works as well. So basically, with that poor man's covered call, it costs about $2,000 to with the leaps I have on right now, but then you can collect $400 a month selling calls against it. So again, it's a 5-month payout. So love DELL going forward right here. And I think the next one, Google, will look real quick here since we're on Yahoo. It was up here big. You can see 207 was the top. It's at 166. Lots of room right now. They've got a target of 200. My target's a little bit higher, 215, but the PE and the PEG is really attractive right now. Forward PE 17, 1.26 for a monster right now. And to me, I look at this as a huge buy opportunity. Besides the 3 beats, the last 3 quarters and the strong buy ratings, these guys are currently let's see, they're in court. There's stuff going on right now, but Apple receives $20 billion a year from Google for a search agreement with their Safari. And you know what? Even so, there's a debate on whether Google is going to continue to pay that. But even if they don't, I'm not sure it's worth $20 billion, and they can use that extra cash, even though they've got all the cash in the world. But I think now they've got so many other revenue sources. They've got Google Search, they've got Android, Waymo is going to be huge. They're killing it right now. YouTube, Gemini, Cloud. So Google is definitely a disruptor and can continue to grow going forward. What are the growth estimates? They've only got 6% for next year. So if that's the case, they're going to kill it next year and continue to go up, in my opinion. But Google, let's see what I've got on. I've got on 2 poor man's cover calls and then a credit spread, 165, 155. So we're in the profit zone on that. And then again, we've got that chart about to break the 200, like a lot of these tech stocks. Lilly's the next one. I've got 2 poor man's covered calls trading at 757. We've been killing it in Lilly. I've got a 700, 690. So I did the put spread. I'm not doing the leaps because it's such a high priced stock, but I love Lilly. It's been down with some of these healthcare drug stocks. So I think they're great to be in. And Lilly, I think, is one of the best right now. It actually, you look right here on this chart setup, it's a triple bottom. They've had 1, 2, 3. Sorry, my face is in the way there. I'll move this over. But 1, 2, triple bottom near the bottom of the Bollinger Band. Huge buy opportunity, super solid stock. I think they've even got a dividend. But let's look at what Yahoo's got on these guys. Lilly, yeah, you can see that triple bottom right here. 1, 2, 3. So there's a big resistance right here. They've got a 966 Yahoo target, and it's at 757. This is a no-brainer, guys. And then here's that dividend, 0.79%. Another reason. So even if there were a recession or slowdown, which I don't think there will be, Lilly will do better in that situation. And huge growth. analysis tab, miss, beat, miss. I'm kind of glad because that's a opportunity, I think, going forward. And let's see, my target's $1,000 for Eli Lilly. They've got strong drug pipeline, diabetes and weight management, huge pipeline. David Ricks is a great CEO. So the Q1 miss that he said was due to R&D charges as well as net losses from investments in equity securities. These non-operational costs weighed on profitability despite robust operational growth. So the fact that David Ricks stated that on the conference call to me is huge. CEOs just don't, have accountability and ownership. He's being accountable. To me, that's super strong management, and I love Eli Lilly right here. Next one is Marathon. Let's take a look at Marathon. But this is another one that's been doing well, and they are a Bitcoin miner, highly tied to Bitcoin. So even though they've missed on earnings, we'll take a look at that. It doesn't. I think they missed on earnings and the stock went up because Bitcoin was up that day. But even Yahoo's got a 19, almost a $20 target. It's at 16 right now. You can see there's been a bottom here. There's some strong support. 52-week range from 9 to 30. So that's a stock double from where it's at right now. And then if you look at there's that miss. To me, that's again, I would say I would love it because you would think the stock would go down, but it didn't even go down when they missed. But what do I have on in Mara? Let's take a look. Yeah, I've got 2 poor man's covered calls. So I just trade this, and you make money in both directions, selling the short calls against the long leaps. MRVL, this is one of my favorites right now. I've got 2 poor man's covered calls and a put spread against it. It's at 63 right now. Double bottom. It's below. I usually like the 50 to break out above the 200 before investing, but to me, double bottom, it's so bullish, and we know these guys are going to kill it long term. MRVL, I may do a video on, I think this may be the best play, but they've got earnings coming up May 29th. The PE is high at 120. It's like 120, but the PEG, price to earnings to growth, is only 1.5 because their growth is so high. They've got a huge room to move up because in the 52 weeks they've been up as high as 130, and yeah, I'm going to do it. Let me know in the comments below if you want me to do a deep dive on MRVL this coming week. But to me, this is a screaming buy. Let's look at what Yahoo's saying. So 1 year chart. Yeah, you can see this big. Just in January, they were up at 127, double where it's at today. And they've got a $100 target. And if we go to the ratings, they beat the last 3 times. Strong buy everywhere. Their growth estimate 28% next year. And I know they do custom ASICs. So for the AI data center, which is huge, and they're competing against like some of the FPGA suppliers and NVDA and these others. But the ASICs, they're not used so much for development, but for high volume. So it's the bigger dollar stuff that these data centers will eventually go to. So it's custom ASICs, and I mean, there's a huge need for it going forward. Next one is strategy. I thought we already talked. Yeah, we talked about Mara. MicroStrategy is very similar, but closely tied to Bitcoin. 530 target is what Yahoo has. And again, the earnings don't even matter with this stock. They missed 3 times and the stock keeps going up. There's huge. So even though they missed 3 times, you don't see this where strong buys and those earnings misses. So it's not tied to the earnings at all. But I love MicroStrategies as a Bitcoin hedge going forward. And just based on the chart and where it's at, right now, and the room to move up. Yeah, it's a flag pattern right here. The 50s above the 200. The only thing is it's up a little oversold or overbought right now, so you may want to wait for a little bit of a pullback and then throw on either a put credit spread or a put and or a leaps option. I always do when I do leaps, typically unless it's super low, I'll do the poor man's covered call and sell the short call against it. All right, NVIDIA is the next one. I've got 2 leaps, and yeah, I got calls against both of them. So whenever my short call is breached and we're at 135, I may roll this up next week. If I'm inside 15 to 20 days, I'll do it in the same expiration. If I'm outside, I'll do it in the same expiration. If I'm inside, if I'm at like 10 days or 15 days, then I'll roll out to maybe the 140, 145 and out to the next month. So instead of June, I would go July. But we're still at 33 days. So I would stay in the same expiration right here. That's just my rules. And again, if you want my rules, download the free options workshop and order my course. It's extremely competitively priced, and it goes over my trading rules. But NVIDIA is a screaming buy going forward. PayPal, this is another one. Trading at 72 right now, and huge room to move. Breaking above the 200 right now. Talked about NVIDIA, PayPal. You can see the chart. They were just up at 90. They're at 72. 82 is where Yahoo's got it. My target for PayPal is higher than that. I've got like 85. The new CEO is cutting unprofitable products. He seems to be doing a really good job. They've now got crypto. I'm doing like $1,000 leap option, collecting $100 a month. I'm looking to pay it off and double my money in less than a year. Q1. Let's look at the earnings. They beat the last 3 times, so they're doing great going forward. Venmo is under monetized right now, and it's growing at 14%. Amazon is huge. They are partnered, obviously, with Amazon, and PayPal is used. So they've got a great revenue stream there with PayPal. All right. 2 more, SOFI and Trade Desk. Thanks for hanging in there, guys, and staying to the end. But I think these last 2 are great trades as well. Actually, long-term, long-term opportunities. But it's right now at the target price that Yahoo has, 14. We're at 14 basically. The 52-week range is 8 up to 18. But again, SoFi is so dominant. If you ever, listen to the earnings or read the earnings transcript, they're killing it everywhere. So it's going to be a big bank and continue to grow. But again, it is near, highs right now. So, and they've beat every quarter, and they're going to continue to do that. But because they beat, and yeah. So I think it's just the valuation right now that's a little bit high. But I trade it. I've only got, so now I may sell more short calls against these, but they don't pay a lot. But I've got 260 in extrinsic right here that I'll collect should it move back down. But I just keep these and am long a lot of several. I've got more because it's inexpensive, so more than my 3 lots. I've got 10. I've got 13 right now on SoFi. And if we look at that chart, flag pattern above the 5200, so beautiful chart. And actually, there could be a breakout, so I wouldn't wait. If you don't have SoFi, I'm buying. So, all right, Trade Desk is the last one. And if you guys have any comments or questions on any of these others that I have on that we're not talking about, let me know in the comments below. Again, comments are very much appreciated. All right. The Trade Desk. This is a new trade I just put on, I think, last week. But I've got the deep in the money call, the leaps, the 70, and I've sold the 80 against it. So making money in both directions. And if we look at the chart, wow, it had a big pullback. Now a jump up, and it's near the top of the RSI. But again, it's below the 200-day. So, and fundamentals on trade desk are really good. Actually, let's look. We can look here on Tasty Trade at the fundamentals as well, as far as the incomes and balance sheet. Look at this, annualized. It's just showing you something else. But look at that, revenue and net income growing year over year, and then the balance sheet, assets and liabilities the same. So super strong. Let's see. All right, you can see it's at 76. It was as high as 139, 141 actually, 52-week range. They've got a target of 86. Mine is much higher. Let me see what I've got for trade desk. My trade desk target is 85, so $10, still $10 higher, but hey, I'll take it. 3 consecutive beats, strong buys and buys. So they're cloud advertising company. I'm just gonna dollar cost average with the poor man's covered calls. They were struggling a little bit with the lower ad spend, but during the fourth quarter conference call, the CEO, Jeff Green, said he wanted to acknowledge that they missed for the first time in 33 quarters. They fell short of their own expectations. So he said it's a small execution misstep, and he outlined their plan to address those shortfalls. So he was extremely accountable as well. So love the management at Trade Desk. All right, guys, remember to hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next video.